So here we are. You're doing the job on costs. I just want to get a sense from you. You've maintained your production guidance. In this environment, have you thought about cutting that back, given the difficult price environment that we're in? And if you're not cutting it now, is there a risk to a cut before the end of the year?
No, look, thanks for the question. Thanks for having me back. No, there's no intention for us for cutting production. And one of the advantages of our production in PNG is it's amongst the lowest operating cost LNG production around. So it's a very viable LNG commodity at low oil prices. So we don't have any intention to cut production going forward.
I mean, you talk about unprecedented challenges that have been catalysts for reassessing all areas of your business. For the industry more broadly, what is the outlook for LNG prices? Are you confident that you've seen the bottom in the spot market?
Look, prices in the LNG market will remain soft for a little bit longer. One of the things that we see is that LNG demand has really been pushed out for a couple of years for new projects as a result of COVID-19 on demand. I think there are something like 90 major projects globally have been delayed their FID, not just LNG projects, but projects generally. So, look, no, I think there's probably a continuation of the same period, but what we're seeing in the middle of this decade and beyond is a divergence in supply and demand and a strengthening of pricing quite strong during that period. We're also seeing in the medium term probably a strengthening of pricing, not to the levels that we expect later on this decade in the second half, but certainly above where we sit today.
Just talking about deals in production, obviously Exxon PNG, that discussion, you're a partner there in the Penang project. That went quiet at the start of the year. That's back on the agenda, we understand. Can you guide the market? Do you expect to come to a reconciliation? Are there new terms? Are there better terms? It was said to be out of the money. What's the possibility of a deal being struck before the end of the year? And what are the terms that maybe have improved?
Look, I think the reality is that everyone's recognised that where the world was 6-9 months ago is not where the world is today, and the projections that everyone made last year are not applicable where we sit today. So the important point, as you quite rightfully said, the discussions were suspended between the parties at the end of January. Oil Search had an engagement, a very informal exploratory discussion just with the state about understanding what the key issues were, and it was conducted in a very positive environment. But COVID made it very difficult for parties to get together and have meaningful discussions. Exxon's now back in country and certainly engaged with the government again on all things LNG expansion in PNG. So it's important that I think everyone's realised that the conditions around which the discussions were conducted at the beginning of the year have changed. And as I just mentioned before, demand has sort of been pushed back a couple of years for new projects. So we've spent a lot of time providing background to the parties. But look, I'm confident that the right decisions will be made and the discussions are happening at the moment in a positive environment, but different, very different to what they were at the beginning of the year. So.
Keiran, you've made a lot of progress in terms of driving down costs. Are you near the end of that process, or are there further savings that you'd want to try and sort of carve out here?
No, we're not through the process at all. One of the things about COVID is that, a very precipitous drop in oil price, it makes you look at every single part of the business. But what we're doing is we're not just taking out costs for one-off. We're looking to see how we drive sustainable costs lower and get our break-even for our existing projects, but also our new projects up materially lower. So, no, we see scope for additional decreases. We've got mature projects in Papua New Guinea. We've got brand new greenfield projects, both with different scopes of opportunity for driving costs down. So, no, we see this as a continuation, and we're embedding what we call a pathfinder group in our company to actually continue to pursue those cost reductions long term.
Keiran, let's just dig a little bit deeper into that. I think you guided the market that you've got the cost per barrel down to $9.50 to $10.50. That's the bandwidth. So What's realistic? What more could you do on that? You've gone, I think, from 10 to 11 bucks to 9.5 to 10.5. Is that the bottom? If you say, actually, I've got more to do, so is there more to do on that? Can you achieve better numbers here?
There's a couple of things that we can do. Obviously, a large part of our portfolio is made up of gas, and Exxon are doing a fantastic job in regard to looking at costs across their business, and we're starting to see those cost reductions come through. I think everyone's looking at how to make these cost changes sustainable, not just one-offs and where they'll drift back. In our own operated areas, we're looking at reducing our footprint, so really focusing on those projects that have an ability to drive value at lower cost. So as a result of that, we'll probably defray capital investment on some of those higher cost projects. So we do see potential for it to go lower. How much lower will obviously be a challenge, but the benefits that we're seeing out of the project aren't really in our numbers that we released today. We're at $10.40 odd per barrel. You'll really see those cost benefits coming through in the second half and into 2021.